Okay, now if anyone has missed part 1 of this video, please go back and watch part 1. So we're going to go on part 2. We're looking at FloorTrader's pivot numbers, support and resistance trading, and just so everybody, even those who come in for part 2 here, just know that we're warning you that trading is very dangerous and you're risking a lot of money, and be very, very careful and educated, and don't trade money you can't afford to lose, and all those other prescriptions. So getting back to the topic here, part 2 of how we use FloorTrader pivot numbers. What we're doing when we come up with any way of trading support and resistance, we have to create a plan. We have to create a strategy. We have to commit to a way of making decisions at points that may be turns, because there's resistance there, like right here, that the participants in the market that day didn't feel the market. They wanted to support the market or ride the market to try to get through that resistance. And what we can do through, you could say, the training, the study, the research, or the subjective sort of paradigm that we evolve if we want to, use our particular trade plan, or the objective paradigm, whatever we're going to finally commit to, is we base it on learning by lots of studying of charts and market in real time of the things that happen at these levels. And then it's a matter of coming up with ways to set up entry criteria and exit criteria. Now, if I'm going to use, for example, these levels, I've looked at the fact that they didn't really challenge the previous day's highs, so they're looking at this point like they want to either be an inside day or a big down day, because they're just not, there was no energy at all above the previous day's close. They stopped just a couple ticks past it. And a lot of people then got stopped out if they were playing the breakout. And those who like to fade the market, which I feel is much higher probability, because when they finally break out, on most days, they have been resisted or otherwise prevented from breaking out maybe 3, 4, 5 times. This is very, very normal that you have one attempt, second attempt, third attempt fell short, fourth attempt stopped a little bit shorter of the previous 2 pops. And even if you have a plan, okay, I'm going to fade, you can use a really tight stop. So even if you don't wait for confirmation, for example, on this bar, you're just going to put in an order that's risking very, very small amount of money. So there are a lot of ways to trade support and resistance. And what we need to do is make choices of what our way is going to be specifically. And that's where personal coaching comes in, to work with you and find out what you can do and what works for you, that you're confident enough in it, you can execute every time you have an opportunity. Because we don't want to develop a method where we guess all the time, and then we never get into trades because we're afraid to pull the trigger, which is the psychology that develops the minute you get a losing trade by guessing. So, all of these things are important. Psychology is important, everything else. So we've got to develop kind of a firm structure, a firm framework for our decision making. But the purpose of this video and every video I'm going to be putting up with all the other ways that we use for support and resistance trading, that we need to understand what the opportunity is that's being presented to us. And we get the knack when we work with it and we start coming up with criteria, and we find that we can have low risk, high probability trades. And if you're more of a guy that likes to hold longer, then we can have low risk, lesser risk, shorter stops if you like to hold and you want to go down to the next significant level, for example, like the pivot of the day. So playing the previous day's close and looking for a target down at the pivot, it worked in this case. It worked in this case. It worked in this case. And, you know, it didn't work if you sold here and used the trailing stop, for example, and got stopped out here. I'm not real big on trailing stops. I'm big on setting up parameters, making a commitment, and I find it's a lot easier to set a target of, let's say, 12 ticks in the NASDAQ and make the target a high percentage of the time than to just sort of say, I'm just going to trail my stop and I'll go for that big, 100-tick winner that you're only able to hold a trade and not get stopped out maybe once every 8 months or so. And this is what people don't realize. Or they'll trade multiple contracts and say, okay, I'll get in 2 contracts here. I'll take profit on the first one at 4 ticks. And on the second one, I'll move my stop up to break even. Or maybe the third one, I'll move my stop up, trailing 8 ticks. And all they do is they give up profits. It always comes back and hits their 8-tick trail or hits the stop that they put back at the point of entry. And they never crunch the numbers, and they never even find out, that this is not an effective way to use money management. So the key is that you come up with money management rules that you have verified will work if you do them every day, if you apply them every time you get into a trade and you exit a trade. We don't just make decisions to come up with money management rules because some vendor, or some teacher or some book says, I found it works really well if I move my stop to break even. I have done, research on thousands and thousands and thousands and thousands of trades looking for some method that worked when I moved the stop to break even. I found it's one of the worst I've ever seen. So, that I don't know, maybe somebody else came up with a different result, and I'd be very interested in seeing them demonstrate that that's the case. But the point is that what these levels are, they work if you can make rules that work when you use them, whatever way you use them. So that's my definition of how you come up with strategies and tactics and parameters for a trade plan. And what I'm hoping you'll see from this video is that, guess what? If you've got levels like this, and the market is going within this amazing proximity of levels that are objective levels that you're going to just pop up on your screen every day because you simply got this indicator, or one of the free ones that's on Big Mike's Trading Forum or the Ninja Trader support forum. There's a lot of pivot support and resistance indicators. I found that a lot of them I didn't like, and that's why I chose this one, even though it costs some money. It's a good indicator package, and he did a really good job with it. And guess what? The proof is in the pudding. The levels seem to work. And you can come up with other levels of work that are totally different than this, as long as they work a lot. Now, what I'm hoping you see is that I'm just going back every day this week, for example, and it's amazing what these pivot numbers. This is the pivot, by the way, and almost every day the market will work off the pivot. And the way the old FloorTrader rules with pivot are is, okay, if they test the pivot and it holds, then the next place they're going to go is resistance 1. Okay, this red line is resistance 1. So here they attacked the pivot, they fell short, and it went up to resistance 1, but it went past it because it was so strong it didn't even make the pivot here. So then they hit the yesterday's high, and that was a pretty clear slammer. So hopefully you had a way to enter here, and if you were trading an indicator like this looked really good. It's quite a nice divergence on this. You could put up other ones, stochastic or whatever, you'll see they'll be diverging, and this is a great trade. But so that's another way, by the way, we're just introducing. You can apply indicators with these levels and find them amazingly effective. So at any rate, once they failed, they failed from resistance 1. The way the pivot traders looked at that is this is going to go down to the pivot again. And it did go down. This time it poked through a little bit. You got a nice long stem doji. Oh, guess what? The the personal coach here is introducing another thing. You can use candlestick patterns off of these. It's another way you can trade with them. All you got to do is create a plan where you come up with something that you are going to use and you use it consistently. And you have a good money management so it actually makes money. That's even harder. But so here we are with the pivot. The stem never closed below it, even on this 5-minute bar here. Retested pivot here. Again, it couldn't go under it, couldn't close under it. And by the way, you got another really nice indicator thing here, MACD, you know, when it's crossing up and widening, that's usually a good momentum sign. They made it back, then all they could do is just barely get past the previous day's high on the close. So now we go the day before that. It's amazing again. They opened up on the day. They hung around the pivot. The pivot didn't reject the initial open move. It had a 1 5-minute bar down, and then it just sat there. Took them a long time. They finally mustered up enough energy. You got through. By the way, it's coinciding. You got the value area low here, which was closer to the lows than the pivot on this day. And then at least till the end of the day, then things changed up. And by the way, that's another thing we do. We incorporate time of day understanding of principles, because at the end of the day here, once you get past 1 o'clock, 2 o'clock, you don't expect this pivot to hold anymore. You see, you expect it to go through, and that's another trading hint for us, or indicator we can use, or part of our trade plan. If we start using these levels to also gauge if momentum's going to carry, if we can expect a trade to maybe make some profits, and because it's actually breaking through something. So you can incorporate breakout principles even though you're trading support and resistance, because it's an indicator that it is going to go down to the support 1 because it's breaking through the pivot at the end of the day. And as the end of the day, again, it ended up being just a range-bound day, so the support 1 holds. Now, on range-bound days, you expect support 1 to hold and R1 to hold. So this is a range-bound day. Even though it got through the previous day's high, our resistance 1 held. Even though it got through the value area low and the pivot, resistance support 1 held. So these are the ways we apply. However many, you don't have to say all of these things I'm doing. Maybe that sounds too analytical to you. You just want the bare bones. You want to get those resistance levels, come up with a plan to trade off of them. Same thing with previous day's high, low, close. You wouldn't do anything here because it just went straight through. You didn't get a pattern. The indicator was bullish. Everything was set up. And then you got this outside reversal bar after they call it a doji gravestone or something. I don't know what it is. It's one of those dojis with a long stem that if the next bar is another kind of double whammy, harami on the candlestick indicator rules, and an outside range bar, you know, a total reversal bar is one of those, then you had the weak bounce off the previous day's high. It didn't proceed, didn't retest R1, so this is a really good area to sell here. They've broken under yesterday's high, so that's telling you they don't want to go up anymore. And by the way, you got an indicator confluence here, and you got a really nice sell here. And on another video, we can maybe go into these moving averages and see how they might play into our way of applying these as well. So basically, this is a real short crash course. Now, by the way, I'm not enough time in this video, but you're going to say, what about when it isn't a range-bound week like we just had? Okay, sure, these pivot numbers work great every day this week, but what about before that was a running market? Well, we can get into those too, and believe me, the pivot numbers still make a play in those kind of markets because you get these breakouts. Whenever you break one of these, remember, support broken becomes resistance, and that's in our toolbox. So these lines are good levels, and you can make rules to trade them very effectively, and you can make rules with good money management, so you can make money very high probability, high reward, low risk, high percentage wins. And that's what we're working on with all the things I'm going to try to just give you a feeling for then on these different videos that'll be coming from my blog going forward. Okay, thank you very much. If you want to learn more, it's easy to reach me right on my blog here. You have the contact information. I'm very accessible. I put my phone number right up there. I don't even make you go through hoops or give me your email or anything else. You got my phone number and my email and everything else. So, okay, hope that helps. Enjoy and happy trading.